The next half an hour, I'll be taking up all your stock related queries. So don't forget to call us and WhatsApp us. Numbers are there flashing on your screens right now, viewers. And on the show, I'm being joined by Avinash Gorakshakar on the fundamentals and Sundar Kevat on the technicals. Welcome to the show, gentlemen. Now let's, good evening. Now let's get started with the first query on the show, which is written to us by Satya from Kolkata, and he holds 500 shares of JSW Cement. He's bought it at 154 rupee a piece. He's looking for a fundamental view on it. So Avinash, coming to you, how are you viewing JSW Cement and also the cement space in particular?
Yeah, I think, see, as far as the cement space is concerned, my sense is that we're going to see a lot of growth in the second half of FY26. Already in the first quarter, we have seen many large cement players reporting very good numbers. In fact, during the monsoon time, normally activity, in the construction space gets little halted, and we see a lot of pickup in the second half. So I think I'm looking forward for a strong volume growth for most of the large cap companies and obviously for the cement sector as a whole. And recently, the government has also decided that GST is going to be readjusted on the lower side for cement companies. That itself will be a big booster shot for the sector as a whole. And I think overall, if you look at the government infrastructure spend, private capex spend, I think cement is one of the major building blocks for the economy. So my sense is that the investor who has put in money in JSW Cement should take at least 12 to 18 month view. It's a recent listing. So I think, even if he has a slight dip in the kind of price which he has purchased, I think you need to keep the conviction at least for the next 12 to 18 months. Only then one could get a reasonable risk reward. So I think, keep the conviction strong, and I think keep a medium to long term view here.
Right. Thank you so much, Avinash, for that. Now, let's take another WhatsApp query written to us by Surya. He hails from West Bengal and holds 450 shares of Suzlon Energy. He's bought it at 70 rupee a piece. He hasn't mentioned the time horizon, so I'd like to take both fundamental and technical view on it. Firstly, coming to you, Avinash, Suzlon Energy, fundamentally, how strong is the counter?
See, I think in the wind energy market, Suzlon is the clear market leader. It enjoys the largest, capacity. Plus now, of late, what we have been hearing and what has been reported is that they enjoy a very strong order book. So I think things are back on track. But I think the investor seems to have purchased this share at a slightly higher level. There has been some selling, from 70, 75 odd levels. At the current level, I think, if the investor can hold on for the next, say, at least a couple of years, then only I think he can expect a decent risk reward. Because one thing is very clear that the wind energy market is now growing very rapidly. The government is also supporting it. And renewable energy in any form is definitely welcomed by the government. And definitely, most of the corporates are also looking at this as a major source of energy. So my sense is, the numbers are definitely improving every quarter. But if you were to look at a reasonable risk reward, I think at least a 18 to 24 month view needs to be kept here. And I think these are very good levels to even average if one takes the next 2 years kind of time.
Absolutely. So Suzlon Energy is some counter that you should be, eyeing for a longer period of time and not for the short term. That's the word coming in by our expert, fundamental expert. But Sundar, I'd also like to come to you for somebody who wants to take fresh positions in the counter, because Surya, has probably, taken positions at elevated levels of 70. But for somebody who wants to, enter the counter now, so what are the levels that you suggest?
Yeah, so Himakshi, first of all, if you see the daily time frame of this chart, so the stock was trying to, hold the 60 levels, but it actually failed. And if you see the current market price, it is currently at 56. Now, this is a kind of classical example wherein the support has been taken out of 60 level, and I would not be surprised to see the stock trading at around 50 levels. And at 50 level, there is a multi-time support wherein the stock would be accumulated. So I would recommend the viewer to, exit at current market price and accumulate at 50 levels.
Right. Thank you so much for that, Sundar. And just a quick reminder for our viewers. I know that, Ganpati's occasion is going on and you must be busy with that. But, this is also your golden opportunity to get all your stock related queries answered. So the numbers are flashing on your screens. Just take out some time and call us right away and get your query solved. And with that, let's go across to first caller who's joining us from Mumbai itself. Hi, Udit. Good evening.
Good evening, Nancy. I guess I got your name right this
Yes,
time.
yes. Oh, yes, definitely. You've got my name
Okay,
right.
good evening, experts. This query is about a share IndiGrid Infrastructure Trust.
Yeah.
I have 50 shares at a price of 160. I just need to know the fundamentals of this stock, and fundamentally, what prices are we looking into the future?
Okay.
And what exactly do they do? Are they typically like those REITs or real estate investment trusts, or these are something different?
Understood. So, Avinash, I'd like to come to you on IndiGrid Trust. If I look at the valuations, it's pretty stretched with, as compared to its peers. So what's your sense holistically on this counter, and is it really advisable for somebody to stay put in it for a longer period of time?
No, I think infra is a very big opportunity, and I think this company is positioned like Invit, where almost 90% of the profitability of the company is distributed as dividends. I think they keep projects under SPVs, and they obviously encash these SPVs at the right time. My sense is, if the investor can wait for the next couple of years, he's already making a decent amount of profit. As the company puts more projects and gets more value enhancement by divesting these SPVs, definitely the stock price is expected to react positively. It's a more stable business where what is the visibility of the business, what are the cash flows coming in, and that is why these kind of companies are favored by investors. So I would say that if the investor does not require capital in a hurry, it's better that he stays invested here, because medium to long term prospects appear here to be quite good.
Right, right. Thank you so much for that view, Avinash. With that, let's go across to Anindya, who is joining us on the phone line from Chennai. Hi, Anindya. Good evening.
Hi, very good evening.
Yes,
Am I
please go ahead.
audible?
Yeah, you're audible. Please go ahead with your query.
Yeah. So I am having a query on NIBE.
Yeah.
And so I'm holding 60 shares with a average price of 1759, 1759.
Yeah.
So I wish to understand company's financial health, because I am observing a downtrend almost now a quarter or so, and I used to hold the stock for next 6 months.
Okay.
So I would like a expert view on this.
Absolutely. So, Sundar, I direct this question to you. NIB is the counter, he bought it at 1759 and currently it has dropped down to 1190 levels. So, what's your sense and what are the charts looking like?
Yeah, so Himakshi, first of all, if you see the daily time frame of the stock has, hitting the yearly high of around 2000 level, and then from there itself, the stock was taken left, right, and center. And if you see the trend, also the trend remains towards downwards. So, it would be not be a bad idea to, exit this counter. And if the bear is interested in this counter, then he could add at 900 or say around 950 levels, because there is where the important support level is. Other than this, the stock could, face some more selling pressure. And coming to the positiveness about this, that if the stock crosses above 1400 level, then in that case the stock could get into a kind of a trend reversal kind of scenario. But other than this, if you see the current the current trend, it remains negative.
Right. And Avinash, I'd also like to understand this counter's fundamental aspect from you, because if I look at the valuations, it's trading at pretty high valuations there. So do you really think that the counter is able to, deliver that kind of returns as well?
See, first of all, NIBE is a defense company and has a very large order book. So, most of these defense companies are trading at fair to expensive valuations. But I think if one were to invest in this company and look at its fundamentals, then I think, you've got to take at least the next 2 years plus opportunity and the kind of growth potential, which looks quite promising. NIBE has recently, recorded a lot of new orders, which are expected to be commissioned in FY26. So I think you're going to see a lot of improvement in the numbers. But yes, in the near term, the stock definitely appears fully priced, slightly expensive to its historical earnings. But if one were to take the next 2 years in mind, I think definitely one can make a decent amount of risk reward. But I think the only point which I would like to say here is that the investor is now looking at a short-term call. I think if he needs to make money here, I think he needs to average, at the current level. and at least take a 2-year call if he wants a fundamental kind of approach.
Right. Thank you so much for that advice, Avinash. With that, we are being joined by Mr. Murli on the phone line from Bengaluru. Hi, Mr. Murli. Good evening.
Yeah, good evening. Good evening, and thank you for taking my query.
Yes, please go ahead with the query.
I bought 200 shares of a company called Caricel
Yeah.
at the rate of 796, 798,
Yeah.
like that.
Yeah.
I want to wait for 18 months. And first quarter results are quite decent, and their good utilization, capacity utilization is good. Only thing is US tariff issue,
Yeah.
where they export some goods, things to USA. That's the only concern for me. Otherwise, there are a decent growth they are likely to show. What is the view of the expert? Shall I hold for 18 months? Or if we have to switch, can I switch out the new things like Sambhavi Steel and all, which is also equally showing excellent growth in the coming 2 years?
Okay, okay. Understood your
The
query.
recent listing. That is the recent listing.
Yes. So, firstly, I'd like to focus on Caricel, and Avinash, I'd like to come to you. Since, it reported decent numbers there in its quarterly results, and currently also it's positioned really well. So, how are you viewing it? And also, it rightly pointed out by Mr. Murli there that the geopolitical tensions, the tariff that are looming in this geopolitical scenario, how are you viewing this counter for somebody who looks at it for a longer period of time?
No, I think, see, Caricel is a very large player in the pots, sink market, and is a very large player in the kitchen, segment. See, I think clearly in the near term, there would be some pressure on profitability because this import tariff issue is definitely not a bad, is not a good sign. But I think one should also look at the fact that the cost structure for Caricel is very competitive. Companies abroad which import this product find it to be very cost competitive. The product has a very strong brand pull. So my sense is that if the investor has a 18-month kind of time frame, then I think he should hang on. This is a good, well-managed company, a very good management. Plus, the product has got very good potential, and they are the largest player of pot sinks which are exported. So my sense is that it's better to hold on. Maybe for 1 quarter, that is July to September, there could be a little bit of headwind. But going forward, hopefully in October, November, if the US government reduces the tariffs and that becomes a final solution, that would definitely give a big re-rating to the stock. So I think you should stay invested here, and I think not worry on the long-term health of the company. Short-term, definitely it could impact the Q2 quarter number, but longer term, I think over the next 18 months, I think things should definitely improve. So I would suggest that he should hold on.
Okay, so hold on with your investment, Mr. Murli. And with that, we are being joined by Ashish on the phone line from New Delhi. Hi, Ashish. Good evening.
Hi, Manshi. Good evening.
Yes. How can I help you today on the show?
So my question is to Avinash ji, and I'm looking for more information on Power Grid.
Yeah.
The stock is good. I mean, what I can see from the numbers, but right now, from the last 2-3 years, the earnings, the top line, bottom line, everything is almost at a stagnant rate. It's not increasing that much. PE is too high to call it, undervalued or even stagnant value.
Yes.
So
yes.
What does he see? Like, is it the Lambi Race ka Ghoda type stock or not?
Absolutely. So Avinash, Power Grid is the counter. तो क्या ये लंबी रेस का घोड़ा है या नहीं?
So I think my answer to this will be that if the investor has a 2 to 3 year kind of timeline, then definitely it's a long-term, very good long-term bet. Because finally, see, Power Grid is a market leader in distribution, in power distribution. But one thing which markets and investors should realize that it's a regulated entity, so they can't enjoy market free returns. Their returns are stipulated by the government. There is a fixed formula by which the company earns. The company is now looking at using its huge distribution network to actually lay optic fiber cables, basically for telecom majors, and that is going to be another revenue stream for the company. But I think looking at the kind of performance the company has been putting for the last 1 or 2 quarters, I would say that if somebody has a positive view on the power sector, then this is a indirect play on the power sector. If power sector grows, definitely Power Grid will also grow. And in a country like India, I think there is a virtual shortage of power. Supply crunch is there. So there's a huge latent demand for power. So unless you got the next 2 to 3 years in mind, this stock is not going to be a multi-bagger or something which is going to create an alpha in the short term. But yes, longer term, I think it depends. It's a very unique player where you can definitely make a decent amount of money.
Okay, so power grid is something, some stock in which you can stay put, for a longer period of time. But Sundar, I'd also like to understand the charts of it. For somebody who wants to invest in it for a shorter period of time, so what should they be doing?
Yeah, so Himakshi, first of all, if you see the daily time frame of this counter, so the stock is creating a lower highs and lower low pattern, and from 28th Feb, the stock has tried to gain some kind of positive momentum, but it failed, and it is now consolidating between 300 to say around 270 odd levels. Now, if anybody wants to add this counter, then I would recommend to add at around 251 levels, or say around 250 to 245 levels, and then from there itself the stock could pick up, because if you see on weekly time frame and on daily time frame, this support is actually aligning. So this is a strong support level to be watched out, and one could expect a target till 312 in coming few months in this counter.
Okay, okay. Thank you so much for that. Now we are being joined by Sanjeev on the phone line from Mumbai. Hi, Sanjeev. Good evening.
Hi, this is Sanjeev Agarwal. I just wanted to have a query regarding ITD Cementation India Limited.
Yeah.
And this company has, I have the net profit in front of me from 100 crores is gone to 137 crores. And the major part is that during the quarter, the Adani Group has taken over this company from the promoters and the public. So I just wanted to have a view. I bought 50 shares at 792 rupees
Okay.
on 5th of August.
And have you bought it recently?
Yeah, 5th of August 2025.
Understood, understood. So Avinash, ITD cementation, viewing all the aspects in mind, is the acquisition and all the news surrounding this counter act as a positive for it for a longer period of time?
No, I think definitely. See, ITD cementation is a very specialized construction player, enjoys a very strong order book. And I think in the short term, the markets would obviously not respect the numbers and the fundamentals. But if you look at the growth trajectory, they have a very large order book, which is giving them revenue visibility for the next 2 years. And most importantly, they operate in very niche projects like tunneling, bridges, which I think very few companies have their expertise. So I think, the investor has just purchased the stock on 5th of August. My suggestion is, unless you've got a 12 to 18 month view, the risk reward will not come. You need to be a little patient. The markets have been very volatile, and markets are now facing a huge liquidity kind of a surplus. If you look at the FISL of today, it was a huge number. So I think, clearly there would be some pressure on the mid caps and the small cap companies where ITD Cement comes in. So my sense is keep a time frame of at least 12 to 18 months, let the numbers come in. I'm expecting a much stronger kind of performance from the company in the second half, starting September. And I think if no new orders get added, that would further, be a good potential to re-rate this stock. So I think, numbers are good, management is good, and I think the business is growing. So I think you need to just give it some time, and obviously that will give you a good risk reward.
Understood, understood. So give ITD cementation some time for getting good returns in the future. With that, we are being joined by Ram from Chennai on the phone line. Hi Ram, good evening.
Yes, good evening, madam.
Yeah.
Madam, I am currently holding 20 shares of Anantraj at the price of 685 rupees.
Okay.
Now it is decreasing, the price is decreasing.
Yeah.
So should I exit from the stock and invest in recently listed Shanti Gold IPO? Or I should hold the stock? Or should I accumulate more at this price?
Understood, understood. So
Please clarify.
yes, absolutely. So firstly, I'd like to take Sundar's view on it. Since the stock is, falling from 685 to now 516 is what I can see. So Sundar, what's your sense? Is it like a buying on dips opportunity there, or what's your suggestion?
Yeah, so Himakshi, if you look at it daily time frame, the stock is into a kind of rising channel pattern. And if you see today's also the stock has actually formed an indecisive candle, which is also called as doji. Now, if you see currently, I would like to accumulate this stock at this level, and I would like to wait till 560 ka breakout, and if that breakout is taken out, then I would not be surprised to see the stock trading at 660 and 640 level in coming session. So I think so this is a good time to accumulate this counter.
Okay, so good time to accumulate this counter. Avinash, I'd also like to take your fundamental view on it. Anant Raj, are you optimistic on it for a long-term investment purpose?
Yeah, I think, see, Anant Raj is a very unique opportunity. It is a very large real estate player from North India. But something which is the most important trigger for the company is that they have set up a data center business in the last 2 years. And I think that is now going to be the next trigger for growth. The company is looking at a 300 megawatt expansion in the data center capacity. And most importantly, the management has been quite positive in saying that over the next, say, 2 years, the data center business will actually overtake the real estate business. And profitability wise also, Anant Raj has done a good job. See, I think these kind of stocks, you need to have patience because it may happen that from a peak level, the stock may correct, but fundamentals remain to be very solid. In fact, FY26 would be another strong year for them, both on the real estate and the data center business. So I think looking at the kind of growth we are seeing in the data center market and such a large capacity being put by the company, I think, the investor needs to add a little more. He can possibly look at even adding at the current level, but he's got to keep a time frame of at least 12 to 18 months.
Okay. Thank you so much for that. Now we are being joined by Satish on the phone line from Hyderabad. Hi Satish, good evening.
Yeah, good evening, ma'am. Good evening to all of you. My question is to Avinash sir. I bought 3,000 shares of GMDC, Gujarat Mineral Development Corporation.
Yeah.
For more than 3 years time period. So I want to know the fundamental view. Company is exploring the rare earth minerals. So what is the future status of that company?
Absolutely. So Avinash, since Satish has made significant profits from this investment of his in Gujarat Mineral Development Corporation, so should he stay put with it or should he be partially booking his profits at this point of time?
See, I think first of all, GMDC makes lignite, which is a very important input for cement companies. And I think, if the outlook for cement, gets better, then I think indirectly, lignite consumption is supposed to be a big positive driver for the company because lignite as a raw material is much cheaper, much productive. My sense is that GMDC is one of the few companies which makes lignite in the country and where, a lot of cement companies it caters to. Definitely, I think if the investor can hold for the next 12 to 15 months, better numbers can be expected from the company. So I think, if he can hold on for, say, next 12 to 15 months, he could get a better risk reward. So my suggestion is continue to hold, although he's in good profit. If he doesn't require the profit, I think, he could definitely hold. He could get a better price going forward.
Right. Thank you so much for that. Now, let's go across to Subbarao, who is joining us on the phone line from Hyderabad. Hi, Subbarao. Good evening.
Good evening, madam.
Yes, how can I help you today?
Hello, ma'am. I have purchased Freedom Finance sector, 623 rupees.
Right.
32 shares. With the 6 months prospect, madam. So I would like to know, recent time it got dropped very much. So I would like to know whether I should hold it or sell it.
Okay. Sundar, I'd come to you since he's looking for a 6-month outlook on Shriram Finance. He bought it at 623. It has gotten down to 580 levels. Although if it talk about today, so it was up in trade today over 0.5%. So 1.5%. So what's your take on it? Do you see it crossing the 623 mark that he really bought at in the near term?
Yeah, so Himakshi, if you look at the weekly time frame, the primary trend for the stock remained into positive kind of territory. The stock has been consolidating from, let's say, October 2024 to till date. And if you see the important support level for this counter is at 550 level. And if that level is holding out, then I would not be surprised to see the stock trading at 700. And I think so that this level could be holding out and it is a good mean reversion kind of play. So yes, the viewer could accumulate more.
Okay. Thank you so much for that. Now, quickly, let's go across to a caller joining us from Bhubaneswar. Hi, Arun. Good evening.
Yeah, good evening.
Yes.
So my query is related to OMDC, that is Orissa Minerals Development Corporation.
Yeah.
So I have around 10 number of stocks, average around 5,000 each. Okay. So I just want to know, like, what would be the fate of this stock actually?
Okay.
Whether
So,
I should,
Yes. So OMDC is the counter. Quickly, Avinash, if you could just tell us that how strong is the company from a fundamental point of view?
The company is definitely fundamentally very sound, but I think this counter suffers a lot of liquidity issues. I think it's not very adequately traded. But I think looking at the kind of business it is in, see, I think all the metal companies are obviously looking forward for a better second half. In fact, the first quarter has been reasonably good. But I think in case of Orissa Mineral Development Corporation, I think, ore prices have corrected. So I think they had a slightly moderate quarter. But I think, yes, if the investor can look forward for the next 8 to 12 months, he should continue to hold. It's a well-managed company, has got very large reserves. So definitely, I think over the next 12 to 15 months, one could expect a decent risk reward. His quantity is also less. So I think, the risk is also not very large. So continue to hold for the next 12 to 15 months.
Okay, so continue to hold for 12 to 15 months. That's the word coming in by our expert. And with that, Avinash and Sundar Kevar, we are running short of time on this edition of Ask Profit, but thank you so much for being there with us and solving all our viewers' queries so patiently. Thank you so much. And viewers, with that, it's a wrap on this edition of Ask Profit, but please don't go anywhere as there's a lot of action lined up ahead on the other side of the break.
Tech has changed, so should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis, so I always thought that okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed, so should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or all of these other things?
As a child, I enjoyed playing tennis, so I always thought that okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from
India's GDP surges by a robust 7.8% in the first quarter of this fiscal year, defying global uncertainties and tariff challenges.
Conversations are going on, and there is an expectation that we will see some kind of a resolution in the not so distant future.
The chief economic advisor indicates that discussions between India and the United States regarding the recently imposed tariffs are actively ongoing. Furthermore, he expresses optimism that the additional 50% tariff will not be permanent and is expected to be removed or reduced in the near future. The markets fall for the third consecutive session, with the Nifty tumbling 1.7% for the week. M&M and Reliance Industries are the biggest drags in the Nifty. The mid-caps corrected for the sixth session in a row, with the Nifty mid-cap 150 down 0.5%. Speaking at the India-Japan Joint Economic Forum in Tokyo, Prime Minister Narendra Modi invites businesses to come make in India and make for the world. He, along with Japanese Prime Minister Shigeru Ishiba, discussed ways to further strengthen the next phase of the special strategic and global partnership between the two countries. And could it be this major reset that the world is waiting for in relations between India and China, as the Prime Minister will head to China tomorrow to attend the SCO summit? He will also meet Russian President Putin in Tianjin. And a group of 8 opposition-run states demand support against revenue loss to the states as the GST Council mulls reforms. The states want an additional levy on sin and luxury goods and a guaranteed compensation mechanism for at least 5 years. Reliance Industries Chairman Mukesh Ambani says Jio will come out with its IPO in the first half of 2026. He spoke at the company's annual general meeting held earlier today. Sunil Singhania's Abacus Asset Manager announces their final approval from SEBI to start its mutual fund operations under the name Abacus Mutual Fund. Commuters in Mumbai are stranded for hours as Maratha leader Jarange Patil's protest march demanding reservation chokes the city's arterial roads. The Central Railway asks Mumbaikars to avoid taking trains from CST, one of the key routes for lakhs of people. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's look at how the markets fared today. Equities remained on the edge as geopolitical tensions weighed heavily on investor sentiment. Benchmark indices saw a sharp decline, largely driven by weakness in Reliance Industries, which was ahead of its AGM. The broader markets mirrored the downtrend, with mid-cap and small-cap stocks also slipping into the red. In a largely somber trading session, the Nifty FMCG index stood out as the lone gainer, buoyed by strong performances from names like ITC, Britannia and Marico. Meanwhile, India's Q1 FY26 GDP data is in, showcasing a striking 7.8% growth, the fastest in 5 quarters and well above the expected 6.7%. This also reflects a strong jump from last year's 6.5% in Q1, illustrating India's resilient economic momentum despite global uncertainties. Gross value added rose to 7.6%, up from 6.5% a year ago, underscoring a broad-based upturn across sectors. Now, following these robust figures, the 10-year government bond yield also climbed 11 basis points, signaling renewed market confidence. A reminder that while some may hastily label India a dead economy, the data clearly tells a different story, one of steady growth and rising optimism on the world stage. My colleague Pallavi now joining us with a detailed breakdown.
Right, India's GDP grew by 7.8%. This is for the April-June quarter. Now, this is the highest in 5 quarters, and it is also significantly above what was being estimated. Now, in the 4th quarter of the last financial year, we'd seen GDP grow by 7.4%, and in the same quarter, in the last fiscal year, that is in Q1 FY25, we saw GDP growth at 6.5%. Now, according to economist estimates for this quarter, for Q1, GDP growth was being estimated at 6.7%. Now, GVA, which excludes the impact of indirect taxes and subsidies, also was fairly strong and above estimates, coming in at 7.6%. What was also particularly impressive about the GDP growth print was that it appeared fairly broad-based. The low price deflators was definitely a factor that contributed to this high growth number to an extent, as GDP is reckoned at current prices and then it is scaled down based on these deflators, the WPI and the CPI. Now let's also have a quick look at some of the industry-wise figures. Agriculture grew 3.7%, which was fairly resilient compared to previous growth. Mining saw a contraction of 3.1%, possibly on account of the trajectory of the southwest monsoons. Manufacturing was very strong, coming in at 7.7%, likely to have benefited from lower commodity costs and better margins. Now, construction grew 7.6%. Growth in services was also strong, with trade, hotel, transport and communication expanding at 8.6% on an annual basis, while financial sector services rose by 9.5%. Now, when we look at these figures from an expenditure-wise trend, private final consumption expenditure grew by 7%, while government consumption expenditure grew by 7.4%. Gross fixed capital formation also rose by 7.8%. What we must keep in mind when we're talking about these GDP figures is that the outlook from here on is a little bit of a mixed bag. In terms of private consumption, that is bolstered by numerous positive developments like the income tax relief announced in the budget, the 100 basis points rate cut we have seen by the Monetary Policy Committee so far, the healthy progress of Kharif sowing, the rationalization of GST slabs. However, after the unexpectedly strong figures that we have seen for Q1, we could see some lower momentum in terms of government capex, and of course, let's also remember that the figures for this quarter do not factor the impact of the US tariffs and penalties, which could dampen growth to an extent in the coming quarters.
Thanks for that, Pallavi. Meanwhile, CEA Ananta Nageswaran also addressed the media about the GDP data in a briefing and spoke about how the Indian economy has defied expectations and continues to be the fastest growing economy. However, he also highlighted the need for more robust indicators of consumption. Let's listen in.
Indian economy in the first quarter defied expectations of a modest growth of around 6.5 to 7%, which was broadly the consensus range. In terms of constant price-based growth, it actually crossed 7.5% to register a number of 7.8% year-on-year in the first quarter of FY26. We need to be looking at digital sales and digital transactions of services to get a better sense of what is happening to private consumption rather than looking at conventional survey-based indicators. So it is good that NPCI has started releasing this data, and we will be sharing this with you. So this kind of should allay concerns regarding urban consumption growth as well.
Meanwhile, the chief economic advisor also says that negotiations between the US and India are ongoing and that he expects the 50% tariffs to be temporary.
There is some uncertainty with respect to the duration of the period for which the additional tariffs related to Russian crude oil purchase will last. But in general, the conversations are going on, and there is an expectation that we will see some kind of a resolution in the not so distant future, and therefore we do believe that our growth target for the current financial year, especially in the light of the strong showing by the economy in the first quarter, we will still retain the 6.0 to 6.8% range that we had outlined for the full financial year.
Meanwhile, sources to NDTV Profit say that India's export promotion mission will soon go to cabinet for approval, aiming to boost new markets like Australia, China and the Middle East. Officials say the work is speeding up on the next phase of the Australia trade deal, with a willingness to offer sector-specific concessions, especially to tap into Australia's $500 billion housing market. Let's go across to my colleague Rishabh for more details.
A bunch of interesting and important updates that we're picking up coming in from government sources. Firstly, on the export promotion mission, the much awaited export promotion mission will be heading to the cabinet very, very soon, is what we're hearing. Could be as early as next week, is what we're picking up. Another very important trade issue that's coming up is, of course, the Australian trade deal. India is expeditiously working on expanding and getting to work on the second branch of the ECTA. This is the India-Australia FTA. A very important highlight of that is, of course, going to be the opportunity that India is now seeing with regards to the Australian housing market. Right, it is forecasting that Australia will need about 1 million homes, and with an average, let's put a low band price of about 500,000 Australian dollars on each home. It's standalone, it's about a $500 billion opportunity that's coming in. And that is something that the Indian industry is also looking to tap into. Big gains expected for steel, cement, all these infra plays that are coming out of India. What we're also picking up is the fact that with regards to the subsidies that might come in for these exporters, the government is not willing to provide a lot of subsidies because that would distort market dynamics. It would reset prices for businesses. Instead, what the government is looking at is COVID-like support, right? It is looking at similar measures that were given to exporters when the COVID crisis had hit. So it is the sort of moratoriums and the interest subvention and market access initiatives instead of pure cash being rolled out or subsidies being given to exporters. What we're also seeing is that the government is also very keenly working with the Middle Eastern countries. They have expressed a lot of interest in signing FTAs with India, and especially with Bahrain and Qatar. Those are two countries that have shown that they want to expeditiously sign a free trade deal with India, and that is something that we plan as well.
The government is standing like a rock by the industry. That's the message coming in from Commerce and Industry Minister Piyush Goyal. Speaking at an event organized by building material manufacturers, he asked the industry to identify sectors impacted by the 50% Trump tariff. He asked manufacturers to specify what support they require. Now remember, the 50% tariff is likely to affect $58 billion worth of Indian exports.
Government, of course, is committed to make sure that all of you do not face any stresses or difficulties in managing the current situation emanating from certain unilateral actions. And towards that end, I would urge all of you to highlight which of your sectors has been affected, which of your sectors needs alternate markets, because we in the Commerce Ministry, through the missions, are reaching out to other parts of the world to look at other opportunities which we can capture. We are also looking at giving a boost to domestic consumption, and you'll soon see the GST Council meeting next week, as early as next week, so that the impact of these changes can be felt by all of you very quickly, and that can give a big demand booster to the entire domestic manufacturing sector.
Meanwhile, Prime Minister Narendra Modi is in Japan on a two-day visit to attend the India-Japan Annual Summit in Tokyo. During the visit, India and Japan signed several agreements in the presence of the Prime Minister and Japanese Prime Minister Shigeru Ishiba. The two leaders discussed ways to strengthen the next phase of the special strategic and global partnership between the countries. The Prime Minister said that the talks were both productive and meaningful, and added that as two of the world's largest economies and strong democracies, the partnership between India and Japan was not only important for the two nations, but also for global peace and security. Meanwhile, the Indian community in Japan gave Prime Minister Modi a warm welcome with the celebrations including Kathak dance and classical music performances. Now, the Prime Minister will also travel to China on Saturday to attend the Shanghai Cooperation Organization in Tianjin at the invitation of President Xi Jinping. He will hold bilateral meetings with the Chinese President on Sunday and with Russian President Vladimir Putin on Monday. NDTV's Gauri Dwivedi tells us what to expect from this big meeting.
We are here in Tianjin ahead of the very crucial SCO summit that will take place and bilateral meetings between Prime Minister Modi and President Xi Jinping as well as President Putin are likely to also be held on the sidelines of the SCO summit. It's important, the first meeting between with Prime Minister Modi being here since the Galwan clash and the conflict that really led the entire India-China relationship into a complete deep freeze. It also comes in the backdrop of three very important developments. First and foremost, Trump tariffs. Every passing day, the Trump administration's rhetoric is getting sharper and shriller against India. That is a context that is likely to come up in these meetings. Second important development, this comes just months after Operation Sindoor, where the Deputy Army Chief did come out with a very important caveat which said that there is complete alignment between China and Pakistan. And in fact, he also said that Pakistan was the laboratory of Chinese weapons. Third important thing, this comes in the backdrop of the Pahalgam terror attack. At the defense minister's level, the SCO failed to condemn the Pahalgam terror attack. Will that now feature in these talks? How will this be handled at the heads of state level are some issues that are likely to come up in this meeting. And we at NDTV will keep getting you every aspect, every update, every development first from Tianjin.
Meanwhile, the market is buzzing with anticipation ahead of the much-awaited GST reforms, with the upcoming GST Council meeting on September 3rd and the 4th that will be pivotal as the Council plans to discuss a simplified two-rate tax structure that merges existing slabs. Now, new measures aimed at easing compliance and boosting economic growth are also on the agenda. For a detailed breakdown, let's turn to my colleague Charu now.
So the GST Council meet, as we already told you, is going to be taking place on September 3rd and 4th. And before that, there are some major reliefs and rationalizations that could be discussed. So one of the first things that one needs to look at is that there is a huge relief for the common man, as a lot of products are going to be brought under the umbrella of zero GST. Now, these include loose paneer, pizza, bread, khakra, chapati, roti, paratha, maps, globes, exercise books, graph books, and lab notebooks. Now, these are stationery products and a lot of edibles that are there. Now, these are currently, under the bracket of about 5 to 18%. And if the proposals go through, they are going to be attracting a GST of 0%. Now, coming ahead, there are a lot of, reliefs that are being proposed for household items as well. So, for butter, condensed milk, the current rate is about 12%, and they are proposing about 5% GST on these. Jams and namkeens could see a GST reduction from 12% to 5%. Coming on to mushrooms, they could see a reduction of about, the same level from 12% to 5%. And for dates and nuts, again, from 12% to 5%. Now, again, for confectioneries and ice creams, for chocolates that have cocoa in them, pastries, ice cream, cereal flakes, all of these currently attract a GST rate of about 18%. The rate could be reduced to 5% on these products as well. Coming ahead now, automobiles. Now, there is some sort of a different slab here. So for small cars that are below 1200 cc for CNG, petrol, diesel, they are currently attracting a GST of about 28%. They could see a GST rate reduction to about 18%. Then three-wheelers, motorbikes, auto parts, seats and accessories also could see a rate reduction from 28% to about 18%. And then luxury cars could see a flat structure of about 40%. Now, coming on to hotels. So if you are spending a night in a hotel where the rate is up to 7,500 rupees per night, you could see a reduction from 12% to 5% without input tax credit. And cinema tickets above the rate of rupees 100 could see a reduction from 12% to 5%. And finally, air travel for only business and premium could see a slight increase from 12% to 18%.
Meanwhile, Reliance Jio is preparing to launch its IPO and list on the stock exchanges in the first half of 2026. The move will mark a major milestone for the telecom giant as it completes 10 years of operations and crosses the 500 million user mark. Speaking at Reliance Industries' annual general meeting, Chairman Mukesh Ambani credited Jio with helping end what he called India's digital poverty.
Today, it is my proud privilege to announce that Jio is making all arrangements to file for its IPO. We are aiming to list Jio by the first half of 2026, subject to all necessary approvals.
And amid oil volatility, my colleague Aishwarya Patil spoke to CMD ONGC Arun Kumar Singh at their AGM about rising oil costs during this turbulent time and the effect on the company's revenue.
Quite a turbulent time to speak to you at this point. AGM highlights you have given to us as well. First off, just if you could start off by talking about the top 3 highlights through this AGM, and especially on the revenue and profit front, what has been driving the growth?
So, world is likely to remain turbulent, but turbulence which is within the margins. In our view, we don't expect oil to, go up very high. Neither we expect oil to drop very low. Both, in our view, is not possible for a longer period of time. It could be happening for some week, 10 days max. Now coming to profit, revenue, if the price remains range bound, then ONGC for that range has made enough arrangement to watch the cost.
Moving on to some news that coming out of Mumbai today, where the Maratha reservation activist Manoj Jarange Patil began an indefinite hunger strike at Azad Maidan in Mumbai this morning. Reiterating his demands of quota benefits for the Maratha community, he has vowed to not withdraw the agitation until the demands are met. What you can see on your screen are groups of Maratha activists that have blocked the road opposite CST and the BMC headquarters, disrupting traffic in a busy area of Mumbai. My colleague from NDTV, Sujata Dwivedi, brings us this report.
Thousands of protesters of the Maratha reservation have gathered in Mumbai, and at present we are here at the Chhatrapati Shivaji Maharaj terminus, and you see the visuals where all of the supporters of Jarange Patil have come here in big numbers, and they are here to show their support for Manoj Jarange Patil and to demand their reservation, not just in Mumbai, but this is the scenario that could be seen across several railway stations, highways, as well as the main roads, where all of these workers, they have come and they are demanding that they need their reservation, and if not given, they will continue to carry their protest. They are performing dance along with dhols and tashas, and they say that this is the way they are going to continue their protest unless and until their demands are met. Currently, at present, at Azad Maidan, Manoj Jarange Patil's protest is underway and is continuously stating that they will try to maintain the law and order situation. But if the 10% reservation to them in the OBC community is not given, they will continue to ensure that the Maharashtra government is forced to give them their reservation, and like you see in the visuals around you.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates. But before I go, some interesting visuals of a flooded road in Saket in New Delhi, where, well, residents were getting some exercise.
Tech has changed, so should your tech show.
point in your mind a thought of something, as you mentioned, cooking or, all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or, all of these other things?
No, as a child, I enjoyed playing tennis. So I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy business?
I think the biggest advantage is long-term thinking. A negative, sometimes the perception of family businesses from the outside can be one where it lacks professionalism.
The next generation in a family business is the most important generation for the future of that business.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
Any point in your mind a thought of something, as you mentioned, cooking or, all of these other things?
You know, as a child, I enjoyed playing tennis, so I always thought that, okay, I'd love to be a tennis player and play at Wimbledon, but I didn't even reach state levels.
Biggest advantage and one biggest disadvantage of being in the position that you are as the next generation of a legacy.
Let's take a look at some key commentary coming in as far as the Prime Minister is concerned. He's talking about he's announced the opening defense and space sectors for private players. S&P Global upgraded India's rating after 2 decades, reflecting growing global confidence in India's role and potential. And even that is something that he's talking about. Let's go across and listen into exactly what he then had to say.
S&P Global ने 2 दशक बाद भारत के क्रेडिट रेटिंग अपग्रेड किए हैं।